Hi guys, and welcome to Freckle Finance. Today I'm going to be doing part one of a two-part series on types of investment vehicles, and today will be on RRSPs. RRSP stands for Registered Retirement Savings Plan, and this is an investment vehicle where you get to defer your taxes until later. So what that means is when you put money into your RRSP, you get the tax return then, but when you take the money out, that's the point at which you get taxed for the money. You can invest in many types of investments within your RRSP, such as GIC, mutual fund, stocks, bonds, all of those fun things. So because of that, I want to make it very clear there is no difference between the amount of money you will make within your investment vehicle from an RRSP to a tax-free savings account. What I mean by deferring taxes is that when you put the money into the account, you will receive the taxes back, but when you withdraw the money, you will then have to pay the taxes on it. So how it works when you're putting money into your RRSPs, so as an example, let's say you make $50,000 a year and you put $8,000 into your RRSPs. You will be taxed that year as if you made $42,000. There is a restriction on how much you can save into your RRSPs, and for 2015 that amount is 18% of your gross income up to a maximum of $24,930. You can withdraw this money at any point. However, the amount that you withdraw will be added on to your taxes for that year. So let's say again that you made $50,000 that year, but you withdrew $5,000 from your RRSPs. You will then be taxed as if you made $55,000 that year. And that's how it works whether you are retired or you're still making other income. This is why you should not be withdrawing this money before you are retired, because it will increase the tax rate at which you are taxed at. And part of the point of RRSPs is that you put the money in when you're at a high tax bracket and you take it out when you're at a lower tax bracket, giving you a lot more money in the end. Some people withdraw money from their RRSPs for their first-time home buyer plan, and this is one of the 2 times where you can withdraw money from your RRSPs without it being added onto your income for that year. However, you do have to pay that money back. For the first-time homebuyers plan, you will be able to withdraw $25,000 per person or $50,000 per couple. And after a 2-year grace period of withdrawing this money, you have to pay this back within 15 years. There's no real benefit to withdrawing from your RRSPs in order to pay the down payment on your house unless it's the only place that you have savings for your down payment. An important thing to note is that you do not lose the contribution room of that year if you don't use it that year. It will get rolled over to the next year. So if you've never put any money into RRSPs, you will have all your year's worth of RRSP contribution room. However, except for the first-time homebuyer plan and the one other way you can withdraw money, when you withdraw money from your RRSPs, you lose that contribution room for life. You do not get it back. As well, and something that a lot of people don't realize when they open up RRSPs, is that the year that you turn 71 at the end of the year, your money from an RRSP must be taken out. It needs to be either cashed out, transferred to a registered retirement income fund, or turned into an annuity. I will cover registered retirement income funds in a future video, but it is important to note that you will be forced to withdraw a certain percentage of that money every year, and that can affect the decision of which investment vehicle you want to put your money into. And these forced withdrawals can affect the tax rate that you will be paying at the time of. So if it works out that you're going to be paying more because you're forced to withdraw the money that year, then it may not be the best option to put all your money into your RRSPs. If you find these videos interesting and informative and you want to learn more, please click subscribe, as I will be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.